Hi, everyone. This is Jason Burack of Wall Street for Main Street. Welcome back for another Wall Street for Main Street podcast interview. For over a decade now, he's been writing an extensive report, The Year in Review. It's a little late, over a month since the new year in 2025, but I'm glad I got him on. He is an award-winning chemistry professor at Cornell University. He's also been writing A Year in Review, I think, for well over a decade now. I think it might have started in 2011. Dave Collum, thank you for joining me again.
Yeah, it actually goes back to '09. Yeah, I'm glad to be here. It gets harder and harder to write every year because the world seems to be in this mega cycle of acceleration. It comes, the world comes at me faster than I can digest it.
You know what we got to do? We got to get you like an artificial intelligence agent, like a GPT program or something better. The new one's artificial intelligence agent. And so they can help supplement. So you could just put some notes into there and they'll write most of the report for you.
The problem is, I see commercials now that are clearly AI based, and I don't want anything to do with them. One of the challenges is that what makes art, writing, whatever, is the fact that it's the human element doing it. And so when you find out it's a computer, I don't want to read news stories written by computers. I don't want to. I'm not a big fan of the AI art. I think it's kind of soulless.
Unfortunately, we're headed towards like deep fakes now with tons of them with video and audio. I mean, like there's people in the artificial intelligence community that are designing like the learning language models, and they're getting tricked with these deep fake videos and audio recordings. Like I've heard that they get like robocalls from family members and they can't tell the difference for 10 seconds.
Right. I hear so many advertisements that sound like Joe Rogan's voice and stuff, and I'm pretty sure he didn't endorse it.
So we're recording this interview on Thursday, February 6th, 2025. The gold price is almost at 2,900. We've had a really big rally. But first, I want to get your thoughts on 2024. Were there any major surprises for you in 2024 that you didn't expect?
I didn't expect Trump to win decisively just because I didn't trust the election. I would have to say that the election turned out in the only way imaginable that wouldn't have been produced chaos. And so in that sense, the one path that would produce relative tranquility, we found. Now, if I were a left of center guy, I'm not sure I'd call this relative tranquility.
Yeah. I live right in the center of all this mess here in Washington, D.C. Metro. Man, did you see any of the videos with the protests? Last night, there was thousands of angry, like, NGO employees, USAID connected people, government employees, like in the streets at buildings yesterday.
Well, who was it? I'm trying to remember. I've got 5 dogs in here, so you'll occasionally hear barking. I think it was about a chart. I can't remember who said it, but someone said, look, if you're seeing a big protest, it is organized. It's not some grassroots organic protest. There's big money behind it. So,
well, also they're taking away the gravy train. I mean, the Department of Government Efficiency, I have to give Elon Musk and the other computer programmers, they're the whiz kids that are programming the artificial intelligence and the other programs going through all this data. Amazing amount of props. They've accomplished more things, I want to say, in the first couple of weeks than I thought that they would accomplish in 4 years. It's just shocking.
They did more in the first day than I expected, than Biden did in 4 years. So, I have a little bit of a mixed emotion. My concern is that Trump has reconstructed the presidency so thoroughly that at some point my team's going to be on the receiving end of this. And boy, I tell you, it would be unpleasant if Harris won and she did 200 EOs in the first 2 weeks. I can't imagine the carnage she could do.
Well, did you see what any of the interviews that Mark Andreessen has done? So he's for our listeners out there, he's a Silicon Valley tech billionaire, but he's also an old school libertarian. So he's talked about how he's quoted Thomas Sowell for economics. He's talked about 3 felonies a day, the libertarian book, that most Americans unknowingly commit 3 felonies a day. I mean, have you heard some of the stories that he said, basically like the Kamala Harris and Biden administrations were anti-innovation for smaller Silicon Valley companies, and they only wanted Google and a couple other, Facebook, Microsoft, a couple other companies to handle artificial intelligence. And had she won, they were planning on using artificial intelligence software to censor the whole internet.
Well, he also did that Joe Rogan podcast that was by no means just a random discussion. He clearly intended to drop some serious bombs about debanking, um, and trying to pull back the curtain on the evils of debanking, which were really pretty horrifying. I knew hints of it, but I didn't know the magnitude and how pervasive it was.
Well, they've done that to the marijuana companies for many years. They've done that to a lot of the Bitcoin companies. I mean, they've done that to Trump supporters. What the Bank of America CEO claimed that they don't target conservatives. And then you had Melania Trump, Barron, some of their businesses, other Trump supporters came out and said they had screenshots, copies of the bank statements that their bank accounts have been shut down.
Right. That's pretty evil because you can't function in a modern world without a bank account. I always wondered, my wife was getting medical marijuana before you could basically get it anywhere, anytime, anyhow. And she had to pay cash, and I didn't understand why that was. I'm guessing it was because they had been debanked.
Well, so it has to do with the the federal banking laws. So marijuana businesses can't operate across state lines. So that's why you had like credit unions. So it was like I've interviewed people in the Colorado state marijuana, and so like there are large banks, even if they have like a Colorado branch, they can't do it because they have to comply with federal guidelines too. So the whole thing is a mess. They need to redo that. We both know, Dave, they're going to redo these things for tax receipts. Well, look at sports betting, right? Sports betting is like an absolute, like going bonkers right now with online sports gambling and sports betting because the states see all the tax receipts coming in.
Yeah, right. As soon as they realized they could make money, the thing to watch for next is you hear lobbyists talking about how insurance companies should be allowed to compete across state lines, which will lower premium prices because of the competition. And what people don't realize is, no, what it'll do is raise premium prices because now the states will all be competing to offer the best deals to the insurance companies. And so you can bet any bill that gets passed has big money backing it.
Or if we see the Department of Government Efficiency and Elon Musk has been hinting the last like 24 hours that the next target is to get rid of Medicaid fraud, Medicare fraud, Social Security fraud. If they start to clean that stuff up, then maybe insurance has a chance to start lowering costs and costs will come down. Because if they're getting rid of tens of billions of dollars a year fraud in the state of Florida, state of Arizona, and there's insane amounts of fraud, don't you think the insurance companies at some point would want to pass on the savings to their customers?
Well, they wouldn't want to. They might have to if there's a free market. On the other hand, you got the states who tried to cap insurance premium prices, and all it did was flush insurers out of the state. So, like in California, let's start there. And so I don't know. Pretty much if anything that government does, you will find someone who benefited from it, right? When government does stuff, there's winners and losers, and they're picking them.
So. Oh yeah, look at the NGO employees that are protesting. I mean, there's tons of them. I've met them on dating apps. A lot of them were DEI hires. They were hired right out of college. Their parents got them jobs. They were unqualified for a lot of these jobs. Some of them were making starting salaries between $70,000 and $200,000 a year. And when I was meeting these women on dating apps, like they were telling me they were flying like first class plane tickets to like emerging market countries, and I was like, where did they come up with all this money, and how did they get these cushy jobs?
Well, the NGOs, they come up with the money from big wads of money from, I guess, NIAID. I'm still trying to keep up with that story. What I'd like to know is are there names being named? Are people being named who could be headed to prison? If so, who?
Do you remember Charles Ortel like about 10 years ago?
I know Charles. I'm aware of Charles's work to the present. Yeah.
Yeah, so I think what's going to happen, I'm really hoping about this. Our listeners can go in the archives and go listen to my old Charles Ortel interviews. Those Podesta emails from the WikiLeaks data drop during the 2016 election, I think one of the main reasons the Clinton Foundation shut down in 2017 is they thought all this stuff with the USAID, the NGO, the corruption, the waste, fraud, corruption, abuse, it would come out back then during Trump's first term. The Clinton Foundation was heavily involved in moving the funds, money laundering with all these USAID funds for many, many years. Now it did shut down, so I don't know the statute of limitations for what felony charges, but they were involved in a ton of basically felonies and illegal activities involving those funds,
including child trafficking.
Yeah. Look. If you speak to Charles Ortel, and we'll see if he starts getting back on the podcast circuit because he's getting up there in age. But Charles has said that like they were involved literally in every single illegal act. They were doing regime changes. I mean, they were working with like these with the private sector contractors, the military contractors. They were doing paid regime changes. They were doing all types, any type of illegal activity for profit, like a drug cartel or a mafia. The Clinton Foundation was doing this stuff for years.
So did the Clintons build their power base from scratch, or are they part of an extended network of power that they became the front man for?
When he left the White House, he didn't even register the charity. So it was
no, I'm talking before that, because the Clinton Foundation goes all the way back to what's called the Clinton Chronicles. The Clinton crime family goes at least back to the Clinton Chronicles narrative of Mena, Arkansas, and all that crap. The question is, did they create that drug empire and that crime syndicate themselves? Or did they just become the front man for a pre-existing one? That's the question.
I don't know. We need investigation here. I mean, like they had so many friends in the Department of Justice. Like James Comey was doing at the FBI and the Department of Justice. All their friends were doing all these interviews. Comey was like, "Oh, I'm a registered Republican." I mean, like, did anyone actually believe what he was saying?
Well, he also his roots chase back to neo-Marxists. So, I can't remember, Reinhardt or something was the name. Some guy he was strongly affiliated with back in seminary school, along with Brennan. They talk about Brennan voting for a communist. Oh, it's way worse than that. Brennan didn't just vote for a communist. He had deep, deep roots. So these guys are bad, much deeper than just the little tiny nuggets we get to see occasionally.
Oh, no surprise there. I mean, there's been tons of like really morally bankrupt and corrupt people installed in the government for decades, but it looks like finally some of that corruption, the waste, fraud, corruption, abuse is starting to be rooted out just recently with the Department of Government Efficiency. So you have like all the people in Congress that were getting rich off this gravy train, and they're trying to shut this thing down now.
Well, yeah, but I don't think it's just the gravy train shutting down. I think there's people who realize that their heads could roll, and there's probably going to be some assassinations and things like that, because there's going to be people who have to get whacked to break the chain of command, right? So
I don't know. Some of these people are so old. Some of these people have been stealing tens of millions of dollars. Like AOC's claiming now she's only worth $45,000. I don't believe it.
No, not a chance. There's no chance.
She has like a Twitter bot army now. I don't know if you've noticed now that anyone who says that she's worth millions of dollars now, there's like 10 like bots that are responding below every single tweet saying, "You're a liar, you're making up propaganda." Like I guess she paid people off to comment under those.
Yeah, the other thing you can hit those bots if you say something negative about Ukraine too. The Ukraine bots show up too. Those are just noise.
So I want to ask you then for 2025, what do you expect for 2025 with the Trump administration? Do you think he's going to be able to continue to cut government spending, or do you think that he's going to run into the wall with like inflation and interest payments on the debt, or a treasury market problem?
Well, hopefully all of the above, in my opinion. I think economically, market-wise, I think we have to go through the valley of death to come out the other side. And I don't think it's avoidable. I don't think Trump can drill his way to prosperity without wringing a huge amount of grotesque excess out of the markets. And so I think I got to figure he's smart enough and his cabinet's connected enough to realize this. So I wouldn't be shocked if some of his stuff was targeting getting the markets to do their corrective action fast. And then that lets them rally out of it like Reagan did.
It looks like we've entered Cold War 2.0 with a technology arms race. I think it was intentional. China releasing what the DeepSeek artificial intelligence program shortly after Trump took his inauguration. That potentially almost crashed the stock market. What there was a sizable correction for in Nvidia stock and some of the other GPU companies related to the artificial intelligence and data centers. So do you think then that we're in like a new Cold War 2.0 and it's going to be back and forth with tariffs, policies, market manipulations with the U.S. and China?
I don't know. Predicting the future, knowing what happened in the past is hard enough. Knowing what's going on in the present is nearly impossible, and knowing what's going on in the future is impossible. So, I just know that every time the markets get this overvalued, there's a day of reckoning somewhere in our future. It's kind of like death and taxes.
Well, we've been seeing a lot of military demonstration stuff released in the last couple of months. You have the drones flying over New Jersey, which I think the U.S. military was doing, and then the U.S. military on their one of their destroyers just released photos and video footage of a new laser cannon. And then China is also announcing like technology advancements with drones and robots. So it's kind of back and forth with showing off their military technology improvements.
Right. What do you think the drones were?
Well, I've listened to interviews with Jim Rickards and spoken to some other contacts, and apparently these were the next generation U.S. military drones, and they
Right.
didn't have weapons on them, so they were flying a search grid. So the U.S. wanted to show off that they have drones capable of going way faster speeds than people expected. And I think they had maybe some type of I don't know, radiation detection equipment on there.
Well,
That's
I heard
the
the
best of it.
radiation rumor, like there was a suitcase nuke they were trying to track down. One thing I was confident is it wasn't a foreign adversary who was putting those drones right over mainland America.
Oh yeah, I agree. I think it was probably the next generation drones, and the U.S. wanted to show those off. So,
I guess so, although, boy, China's drones are impressive too.
and then the robots. I mean, they have like tons of humanoid robots there now. The U.S. is also working on those. Elon Musk with the Optimus ones and
Right.
Boston Dynamics.
Yeah, I'm not convinced the tech world hasn't gotten ahead of itself.
What do you mean by that? Do you mean like stock market valuations? What do you?
No, well, that definitely that. I mean, the Mag 7 is going to hit a brick wall. Um, there's ethical issues here that are going to get really challenged, and the things they can do now um, have me a little on edge. The chance of a rising authoritarianism continuing to rise is a serious problem.
Well, I also think that over the next 5 to 10 years, that unless people adapt to artificial intelligence software, some people are going to be out of jobs a lot faster than they think. And I've just been watching a lot of presentations from tech company CEOs, whether it's like a fast food worker, if you're ordering from an artificial intelligence software at a video board at a fast food restaurant at the drive-through, or even white collar jobs for research or customer service phone calls or sales, like an online sales job. You can have an artificial intelligence agent. I think Salesforce is already talking about installing a lot of them this year.
Yeah. Well, there's always going to be tech, even during awful periods. There's a thing called primary inventions that are, you know, um, elevators, turns out it's one of them that allowed us to build upward. Um, Electricity, the internet, things like that. And then there's secondary inventions, which are the, appliances and computers and things like that. And it turns out the 1930s was the best decade for secondary inventions. So,
Oh, you mean based off electricity? You mean like appliances?
yeah. So once electricity showed up, then the question is, what do we do with it? And those are the secondary inventions.
Well, I would
The
say
best decade was the 1930s.
well, in my opinion, I think this one's going to be different because I think this is more of switching from horse-drawn carriages and buggy whips over to automobiles. So I think this is going to be that type of scaling here. That a lot of potentially software job, a lot of customer service jobs could be lost. Online sales jobs, people that would do what telemarketing or things like that, those things could be lost. Research jobs, so like legal research, if you're an associate at a law firm and you're a gopher, what at the bottom, an artificial intelligence software can do a lot of the work. Same thing for a junior investment banker. I mean, the CEO of Goldman Sachs was talking about how Chat GPT did 90% of the work for an investment initial public offering prospectus that a team of junior investment bankers would take 6 weeks to do. And it did it in a couple hours.
Yeah. one of the things I've kind of noticed is it's particularly good at doing things that really just involves moving money around. Um, can ChatGPT make a better widget?
No.
And therefore, is it really wealth creation?
No, but I think it can help with like customer service. So they're working on like text to speech. So they're working on what kind of Dragon Naturally Speaking or ordering at a video board. So I think some of these customer service jobs are going to be gone faster than people expect. It's looking like they're already starting to test these things out, and the next 5 or 10 years for some of those jobs are going to be rough.
Right. Well, one could argue that's creative destruction. It might be more destruction than creation, but um, there's always been people who have to retool their existence.
Oh
Um,
yeah, I like creative destruction. So in the long term, that's good for the economy. I mean, like in the short term, though, that could be a couple years for people to adapt and figure things out.
right. Yeah, I agree. It makes people adapt quickly. And I think you can have creative destruction, which is too fast, such that it's so fast that you're not amortizing the cost of the previous generation before the next one shows up. And
Are
an
you
example I like to say is imagine that, every 3 years you'd bulldoze your house and built a better house. You'd be broke, right?
Yeah. Yeah,
So,
I mean, most people can't afford those upgrades all the time, especially if you're not getting the tax
well,
breaks.
can society afford the upgrade? Can creative destruction be too fast? And I think the answer is yes. I think each generation, which has a huge capital demand, you have to get that capital back from that generation to pay for the next generation.
Well, unless you're getting the tax breaks in the tax code where you make the
Someone's paying
investments.
for it. Someone's paying for it.
Are you actually using artificial intelligence software yet in chemistry? Are you using that to check your work?
No,
Okay,
no.
so they're not adapting to that yet?
Well, they might be, but I'm not. I no, no, no. Others might. It's going to produce an inferior product.
Oh, you think so?
Yeah,
In
yeah,
medical diagnostics, I mean, it's already checking the work on human error for some doctors because some people are uploading like X-rays, and the human doctors that misdiagnose things are already being corrected by the artificial intelligence.
yeah. I could imagine that. The other thing I can imagine, like for example, MRIs. Why don't we get full body MRIs every 5 years, like a colonoscopy? And artificial intelligence ought to be able to take a full body scan and interpret it, especially in the context of previous MRIs from the same person, to look for problematic areas that the human eye would miss. So,
There's
yeah,
companies working on that. There's companies. They were at the Consumer Electronics Show. That's a very good point. There's companies definitely working on that. Healthcare is going to be one of the industries disrupted. Medical diagnostics, drug discovery, fixing human errors by doctors. That's going to be artificial intelligence. Definitely going to help there.
well, we're going to have a lot of those too, given the boomers and given the fact that the kids going to med school are inferior.
Do you still think with Trump in the White House that there's going to be more inflation coming?
I think there's more inflation coming. I'm not sure it correlates with Trump in the White House. What I do know is if you onshore manufacturing, there will be at least a period of inflation, yes.
Despite Joe Baby, yeah. I mean, the narrative is what if they
Well,
increase oil production.
that's his attempt to fight back the inflation forces of onshoring. So if you cut the cost of energy, you cut the cost of everything. So that puts a serious disinflationary force on the cost. So that's good. Um, I'm a little club of Romish in the sense that I think that and there are smart guys who disagree with this, and ones who make me pause, like Doomberg, for example. But I see a finite orb and infinite growth as incompatible.
Oh, so you're saying with the energy then? So there's an energy issue with infinite growth?
Well, infinite growth is nonsensical. It can't happen. It's not possible.
Well, especially without like boom and bust cycles or depressions, because that's normally what bankruptcy,
Well,
deflation,
but
depressions, that's normally.
if along the way, that's, if you look at the change in GDP from the time of Christ, and look at the growth in the GDP from the time of Christ to the present, a couple of pretty good millennia, right? And you try to put a book value in modern dollars. You could use gold if you wanted, but in modern dollars of what the world was worth back at the time of Christ, you could kind of come up with a crude estimate of the value of the buildings and things like that. And then if you ask what rate of compounding gets us to the present, the answer is it's infinitesimal. It's unbelievably small because, 2,000 years of compounding is an unbelievable exponential function. So what's the message? Well, the message is that we create wealth at pretty much the same rate that we consume it or destroy it, which means it's a zero-sum game.
Well,
What do
also
we
that
got?
2000-year period, you have what 500 years of dark ages where most adults couldn't even read or write. So yeah, there
Right.
was
So
like,
the various mechanisms by which you end up with very little growth can vary all over the place, but you can't compound indefinitely at any sort of high rate.
well, especially without allowing deflation and bankruptcy. I mean, that's a normal part of a healthy economy
That
is you
becomes
have to.
wealth destruction, right? That becomes wealth destruction. So again,
Well, creative destruction, wealth destruction. Yeah, I mean, like, and then the people that were more disciplined, right? So that didn't take on too much debt, that had cash in the bank, they can go buy the assets and they can go fix the company or the
right, I'm,
businesses.
I'm talking about the entire human race. I'm saying we compounded at almost infinitesimal rates for the last 2,000 years. Right? It put into your calculator 1.01 to the 2000th power and see what the multiplier is. So what do you think the book value of the world was at the time of Christ? I mean, in modern dollars, it would have to be in the billions, I would think, forgetting about how you measure the value of real estate, but all the buildings and stuff. Yeah.
Well, they wouldn't have believed any of the technology advancements. That's so there's been just
Right. But the
amazing
point
accomplishments.
is if you take a couple of $1 billion and you compound it at 0.1% a year, uh, you get a very large number, which tells you that for the sustainable compounding rate of wealth is very close to zero. It's not zero. We've made progress,
I mean,
but
it's tough. It's tough to measure this accurately though, because of fiat currencies, because they just print the money right with all these bill.
let's measure in terms of let's measure the book value in terms of a man month of wages, right? Just say what would the book value of everything be at the time of Christ in terms of manual labor as a currency measure, which hasn't changed, right? That's kind of what
Yeah,
people,
yeah, it would be in silver or gold would be more stable.
well, again, my point being is that we don't compound wealth. You think you do, and then all of a sudden you have a world war and you destroy it. And then you dust yourself off, say, well, that sucked. And then you compound wealth for a while, and then you have another world war and you destroy it. And then you have pandemics and you destroy it. And the fact of the matter is that if we had a 3% growth in GDP for 2,000 years, we'd swallow the world.
Well, we both know those GDP numbers are fake, along with the
Even
jobs.
if,
Look
let's
at the
say,
job. The jobs reports are fake too. They were the last 18 months. Every single month, they revised them downwards.
but I'm saying if you had a 3% legitimate growth in the GDP, it's not sustainable over those 2,000 years. So the two pretty good millennia, the growth rate was almost unmeasurably small. And
It goes in fits and starts, though. I mean, it depends what types of without what the internal combustion engine, the steam engine. There's normally a couple key in electricity, couple key inventions that triggers like the next wave of growth. But
and
normally
there'll be
there's
a
like a
couple of key
dropout
moments
before.
that'll trigger the total destruction of that wealth too. The argument can be used going both directions.
Oh
You
yeah,
know,
I agree.
they
There
say
could be a lot of
equities
humans
are,
out of jail. Oh, I
they
fully
say
agree, Dave.
equities return more than bonds because there's a premium on equities because they have a higher return. Well, free market would arbitrage away that higher return. And you say, but the stats show that it does. I go, not if you go far enough back. And in fact, people have gone back 200 years and they say the bond market and the equity markets returned about the same, which shows you that the free market has a way of pricing things and equilibrating them. And I think it was Benjamin Graham who said, if you believe that stocks return more than bonds, you're delusional. You go, well, but they have. And I go, not for that long. And there will be some point where all of a sudden the Etch-a-Sketch will be shaken. And all those guys who thought they had the asset class that would in perpetuity give them good returns will discover they got crushed. And so the favorite trick is people look at the last, 50 years of returns. Well, I'm sorry, but 50 years of returns happens to be the best 50 years in history. And there are 50-year periods in the, if you own the top in 06 on an inflation adjusted basis, you broke even in 81. You didn't move a buck between 1906 and 1981 in terms of capital gains, inflation adjusted. People don't know this. They think that the equity markets return 9% or 12% or whatever. No, they don't.
I don't think anyone wants to hear what you just said because the majority, especially younger adults now, they're involved in markets. They're trading on their phone, on the Robinhood app, or on a crypto exchange with altcoins or meme coins or meme stocks or sports betting. And it just seems that so many adults now are all trying to get rich quick. That's the mentality.
Yeah, but the way you get rich in a really serious way is you create wealth, and everything you just described is a big waste of human resource.
Yeah, especially like Farcoin.
You just described the drippings off the floor of humanity is what you just described. So society collectively can't get rich shuffling money around. That's not possible. You get
I agree.
By innovation. You get rich by creating stuff. You get rich by creating stuff that's durable.
New products and services. Yep, that improve productivity.
Even services is dangerous because once a service... the thing that never gets corrected in the GDP is not just how much it costs and things like that, but how long it lasted. So I got an argument with, I think it was a Stanford or a Berkeley economist. I said I thought the Depression didn't end till after the war. And I made an argument about the fact that the war was a period of rationing and stuff. So we were living a depressed existence during the war. He said, yeah, but the GDP grew blah, 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 30% over World War II. I thought about that for many years, and I wrote about it. I said, yeah, but if your GDP involves making shit that you turn around and blow up, that's not GDP. That is not GDP. By the way, what's also not GDP? Healthcare is not GDP, most of it. If you want to know if healthcare is GDP, tell me this. Would we be better off if we didn't need healthcare? The answer is yes. So what is healthcare? The increasing cost of healthcare is the increased depreciation rate of a huge asset class, the boomers. And if the boomers did need health care, we'd be better off. And therefore, we're not. It's keeping them alive is like if you had a Chevette, 20-year-old Chevy of some kind, it was in the shop every week. You'd spend a fortune. That would all count as GDP. It's just the depreciation rate of the Chevy.
That's an important point there about GDP, and I agree. For the World War II GDP, it was fake. They just came up with the numbers, tracking consumer spending or producing any good for the war effort, even if it wasn't even useful. The other issue there is what the Keynesian broken window fallacy that you just described. So if the U.S. is the only country left that has factories that didn't get bombed, right? Because like Germany, England, Japan, France, a lot of these other key countries in World War II, all their industrial base, their factories were bombed out. The U.S. was the only one. China was also bombed extensively, was the only one that wasn't. So the U.S. had a huge advantage after World War II because we were the only one who didn't have our factories bombed, so we could manufacture all those goods and sell them to everyone else.
Right, but the world didn't benefit from blowing everything to bits.
Well, the U.S. did, but yes, and that's why we became the sole superpower, yeah.
And by the way, the other thing that's a load of crap is the idea that people say that we inflated our way out of the post-war debt. No, we blocked and tackled by recreating the Western world. So,
Well, didn't they do yield? They did yield curve control in the 1940s because I've
they
interviewed Lynn
did.
Alden. Yeah, I've interviewed Lynn Alden about this a lot, and she's talked about what
Yeah,
financial
it's like
repression you.
10% below the rate of inflation, right?
But
But
then decades later, you got stagflation, right? So it built up with guns and butter, welfare warfare spending, regime changes and expansion,
yeah,
economic.
but think about the post-war period. We were something like 50% of the world's GDP. So to the extent that we had post-war debt, do you really want to claim the yield curve manipulation did that or repression did that? No, we were pounding it. My son gave me a copy of Life magazine and Time magazine on the date of my birthday, which is April 25th, 1955. It was a very clever present, actually. And if you go through it, one of the things that was really noticeable was that Time magazine was just page after page of smokestack industry ads like Alcoa and General Electric and shit like that. And and Life magazine, it was page after page of consumer products and stuff like that. We were cranking. So I'm not giving yield curve control credit for getting us out of debt from World War II. We crank shit.
Oh,
One of the things that World War II did leave us, the wealth creation of World War II for the United States, was the increased capacity to create wealth very efficiently because we took what Henry Ford began with the mass production and we refined it. So
I'm
that
actually
was the big win in World War II is we knew how to produce things in quantity.
Well, I'm not giving yield curve control credit for anything. I think it's terrible. The only one who benefits from that is the government because the government gets to spend like crazy and then the debt gets more or less inflated away.
Well, can you name a country that really for sure inflated away their debt? That's one of my favorite questions. Can you name one?
I mean, eventually the currency takes the brunt of it. The purchasing power of the currency takes the brunt
Can
of
you
it.
name a country that got deeply in debt and inflated their way out?
Well, normally it's emerging markets that get into trouble because they have debts in foreign currencies.
Did they inflate away their debt?
Most of the time, at least partially, not the whole thing though.
No, in the end, they default.
The market starts a route on the currency, and then there could be a regime change in the government. Yes, like the banks have bad trades. I mean, with
When a
at this point,
banana republic has a hyperinflation in their currency, that doesn't inflate away their debt because the bankers didn't lend them the money in that currency. So, for example,
or in Argentina, like what they did, I think in the '90s, Dave, is I think they reissued the mortgage debt for regular people for their homes and stuff, and other debts they reissued the debt in the new currency and wouldn't allow the debt to be inflated away.
well, but Argentina defaulted 6 times in 100 years. So the only country I can name that looks like it might have inflated away their debt is Israel. After the Yom Kippur War, they had a big debt, and then their inflation rate went triple digits for a couple of years, and then they brought it right back down. I'm going, what a miracle! What's that all about? Well, let me point out that we don't know if it's possible that maybe the United States shoved a huge wad of cash in their pockets.
Okay, so the point you're making is that no
What I'm making
country
is you don't
can
you don't
fully
inflate
inflate
away
their
debt.
debt.
You don't inflate away debt. You inflate, you destroy your currency, but in the end, there's a default.
I mean, Venezuela has more or less done that, and a lot of rich Venezuelans don't save at all in their own currency. Like they use debt in the Venezuelan currency, and then they take advantage of investing outside of their country.
But
Same thing
any
happens in Turkey.
international debt that Venezuela had was not denominated in their currency. So they can destroy their currency all they want. And that doesn't, like Weimar Germany, great example. Weimar Germany destroyed their currency, destroyed their society, but their debt was in gold. And therefore, they didn't inflate away their debt. They defaulted when they ended up in World War II.
That's true. They had the reparation debt, yeah, but the average person got financially wiped out.
Yeah. Oh, I don't doubt that. Hyperinflation destroys the fabric of society, but it doesn't solve the problem. And then let's say it hypothetically did. We have $2 million per taxpayer of unfunded liabilities. That's the round number, plus or minus a few 100,000. And people say, well, we'll inflate away our debt. And I go, okay, so they're going to take away $2 million of your spending power. How is that any different? So it doesn't solve the problem. You're out $2 million, whether you just go broke or you have to pay it or you inflate it away. Someone got screwed out of $2 million per taxpayer.
And I think that's why a lot of the younger people don't want to save at all, because they want to go gamble on sports betting or Bitcoin, or they see some of this stuff and they're like, I'm going to try to get rich quick and gamble.
They are collectively responding as a rational individual would respond in an inflationary world, and that is they are attempting to capture their little share of the Cantillon effect. They're attempting to catch the wave of appreciation that's fictional, right? So again, you can add up all the sports betting and all the lottery and everything, all those things that people spec on football and meme coins and everything. And none of those things represent one shred of wealth. Not a shred. I'll tell you what I'll give you. The blockchain might be a net gain. Great book, by the way, is by Robert E. Gordon. And I can't remember, but it's got wealth creation in the title. If you go Robert E. Gordon at Amazon. And he basically says 1870 to 1940, we cranked. 1940 to 1970, we tapered off a lot. 1970 to the present, it's been dead. With a little blip in the late 90s. And one of the things he says is, look, you can talk about how technology will come along and increase your productivity. He says, you can't find it in the numbers.
Well, because government spending is so much of the GDP. I mean, there's so much waste, fraud, corruption, and abuse with all levels of government, with social transfer payments. I mean, like, they gave out trillions of dollars just in the last 5 years. 2019, 2020, 2021, there was trillions of dollars extra. I think the money supply, Kyle Bass said this, increased by 40% at one point from
Here's one for you. If you take the S&P 500 and you inflation correct it. Now, I just made a statement that in 1906, if you look out and you extrapolate across it and boot up an inflation adjusted S&P 500. And if you look, you'll see that the price in 1906 was a bottom tick in 1981. What's that, 70 years later? And so you treaded water for 70 years. Again, peak to trough. If you look at the 20th century, inflation adjusted, it appears to go up about 2.5%, maybe. Buffett said the most you can expect to get, forgetting about valuation changes, just generally says most you expect to get is 4% out of the equity markets. And then, so Ryan Grice puts out a chart, and he does the S&P 500 corrected for the M2 money supply. That seems like a pretty clean inflation metric. Not perfect, but not bad. It turns out from 25 to the present, it has gone down. Now, when you add in dividends, but not taxes, not fees, which you can imagine being a pretty erosional cost, the S&P grew about 3.79%, which is pretty much an error bar of 4% that Warren Buffett talked about.
And that's probably, I would argue, that's underperformed the real inflation rate some of the years. So if it's only growing,
I'm going to call him too the real inflation rate. I won't concede the CPI is even remotely accurate, but the M2 money supply is not a bad metric of inflation. But the key here is that you don't grow wealth at the rate that people think you grow wealth. And the way you fake people out is you pick a window that looks like a good window, but it's not. Now, I know people know, those listening probably know because they've been listening to your podcast, that valuation should go up and down, but it shouldn't trend. There's no reason why all of a sudden valuation should get higher and higher and higher. And if you want to assume they do, well, then you're going to say, okay, so let's say you buy something with a PE of 10, you're priced to receive 10% from that, right? That's a 10% cash flow off a PE of 10, period. If that valuation goes up to 50, now you're priced to 2% return. So if valuation should flop around and prices should get stocks should get expensive, they should get cheap, but it should just flop around. From 1880 to 1990, that's what they did. And then they left the channel. Now here's the deal. They shouldn't trend, but from 1981 to the present, they compounded annualized 4% a year. So we had a 4% growth in valuation metrics over the last 40 years. We are not going to repeat that. In fact, I submit that we will do precisely the opposite. We will have a negative 4% compounded over the next 40 years. Path independent. I don't know when, how, what. I predict that 40 years from now, if we are sitting 40 years from now at historical average valuation, and if we assume that the GDP doesn't get a major hiccup, a major fuck up, or somehow we don't find some way to grow it better than we grew in the 20th century, which, excuse me, I would not want to bet against the 20th century as being our best century, then it turns out the market will break even.
Well, you mentioned my favorite phrase. You mentioned the Cantillon Effect. So I think that's an important part. Over the last couple of decades, Dave, the U.S. economy, the tax receipts for the U.S. Treasury, they've become increasingly more financialized, increasingly more dependent on higher home prices, inflating those at basically all costs. They cannot allow home prices to stay low or crash for a long period of time. And then the other one is the general stock market indexes in the U.S., the S&P 500, the NASDAQ 100. There seems like a concerted effort over the last couple decades to make sure those stock market indexes are juiced and not allow what a prolonged bear market, deflation, bankruptcies.
I guarantee you people are going to eat shit and die if they assume it won't come down. I guarantee it. I'm staking everything of who I am. I guarantee you. Don't know when. Name a market that got way overvalued. I have our markets at 200% over historical average valuation. I follow about 25 metrics. You can debate whether 200% is too much or too high, too low, whatever, but there's a bunch of metrics that I'll kind of point out. Take the case Schiller. Historical average fair value from 1880 or whatever, the reconstructed S&P to 1990 was around 12. It's now 38. So if it regresses to the mean, it's going to drop by 70%. Now,
you're talking about free markets, and you're talking about allowing bankruptcies.
I'm talking markets break free no matter what the hell they want to do.
But my main point, though, here is that there's policymakers here in D.C. at the Federal Reserve Bank, the Church. They will destroy the currency if people think it's.
Doesn't matter. You name an asset class that got to way overvalued that didn't eventually get cheap again. You can't name one.
I mean, we could have, though, the stock market index go up in nominal value like Argentina or Zimbabwe or Venezuela. I think that's the goal. My friend.
I don't care about nominal. I notice I say inflation corrected all the time. I do not care about nominal value because inflation is just fictional gain.
Yep. Well, that's my friend, hedge fund manager Cuppy. He calls this project Zimbabwe. So the goal is they're willing to destroy the currency and the purchasing power to nominally inflate home prices in the stock market. So that seems to be like.
And that means they're morons because that means that they somehow think that's better than just letting the system stabilize.
It funds the government. I mean, like, look how rich all the politicians are trading stocks. Look how rich.
It's not the politicians trading stocks. How's our government debt doing?
Oh, they don't care about that because, like, these politicians, like, in 10 years or less, they're worth over $10 million, a lot of them. Okay, and they're apparently lying about it.
But you're making a case for a total disaster in our future. We now have a debt that's growing at 7% a year. GDP can't possibly grow more than in the 20th century. It's said to be around 2.2%. So you can't grow your debt at 7 and your GDP at 2.2 without eventually hitting the end of the rope.
Oh yeah, I agree. Or totally destroying the currency. But my point though is that the people here in Congress, they don't care because they're going to be worth $10 million before the shit hits the
Which is
fan, and they're
why,
going to have their real estate in other countries and their bunker and their
right,
gold and their Bitcoin.
right. Here's what we should do. When that happens, we should have a populist movement and go hang them. We should go find them and rout them out, hang them from the nearest tree, storm the Bastille, empty the Bastille, and kill the Romanovs. Right? This is what they're heading for. If they want to do this, let them do it. But I guarantee you, the populace at some point, that never works well either. You end up hanging upside down from a bridge.
And that's why the billionaires are buying like those bunkers in New
Well,
Zealand and private.
they're going to have to stay in those bunkers. That you keep describing unstable situations as some sort of like it's going to work. It's not going to work. Regression to the mean, corrections, these things, real corrections, not fake corrections, real, not some 20% drop. I am talking really gutting the excess out of the system. They always occur, they always appear. Right? Japan had 14 of the 20 largest companies in the world back in 1989. Where are they now? Nothing, squat. The US, Buffett even admitted this. The US has, I don't know, similar stat. He says in 20, 30 years, they won't. The Mag 7, here's a question for you. When they write the final chapter about the Mag 7, is it going to be a success story or a horror story? It's going to be a horror story.
I don't know what's going to happen in the future. A couple, even 5 or 10. The leaders in artificial intelligence right now, they could be losers.
The Mag 7 right now is a nightmare scenario. So, for example, let's take Apple. Apple has increased tenfold in price over the decade that it grew its revenues 50%. How do you possibly imagine that won't correct? Microsoft, 150% growth in revenue. Oh, fantastic. Tenfold gain in share price. Not going to hold up. Nvidia, 25-fold gain in revenues. You go, oh, that's great. 250-fold gain in price. That's a tenfold correction to get back to a rational price. These stocks are going to create widows. They're going to create widows because you can't just buy stocks at any price. It has never worked sustainably.
Well, I don't have exposure to the Mag 7 right now, so I've kind of avoided that stuff.
We also all do at some level, right? When they go down, it's gonna be like you're, in the burbs of Hiroshima or something.
Well, I'm a contrarian value investor. When uranium was hated during the pandemic, I was buying Cameco between $8 and $15 a share and writing articles about it, and then it went up 4x or something like that in the last 4 or 5 years. So now that it's gone up substantially, I mean, when the thing goes up that much in price, I normally don't want to buy more. You want to take some money off the table, go look for something that's cheap and hated. But I'm a contrarian value investor.
Well, during that period you just described, nothing corrected. One of the arguments I have against Bitcoiners, I don't want to get in a Bitcoin argument. I grow weary of them. But the one thing that Bitcoiners have never faced is a serious liquidity crisis. And so Bitcoin was a twinkle in some guy's eye in 2007, 8, 9. So Bitcoin has its first real battle with a global liquidity crisis, and it'll be fascinating to watch how it responds.
Well, I would argue there's built-in boom and bust cycles into Bitcoin. So every 3 or 4 years, there's a boom and a bust cycle.
Bitcoin's boom and bust cycle. Bitcoin has never been through a global liquidity problem.
So are you describing then where people are forced to sell their Bitcoin and there's way more sellers? So it's like a margin call in some other type. Let's say a hedge fund has all these leveraged tech stocks, right? And you're saying they're going to have to sell their Bitcoin too?
Well, let me ask you, how did Bitcoin do in 08, 09, the last time we had a real crisis?
It wasn't there in 08,
exactly. 09. I'm saying Bitcoin is a damn virgin. It doesn't know There is not a shred of evidence how Bitcoin's going to respond in a global credit crunch.
Well, didn't it crash in 20? It crashed in
I'm not talking
2020.
about the price of Bitcoin. I'm talking about Bitcoin when there's a global credit crisis, and it's never experienced one.
I mean, it has crashed like 50 to 70%.
That's not a global liquidity crisis. Bitcoin has had its own dips, some spectacular ones, and it's been a great run. And some of my buddies all over the internet are Bitcoiners, and I'm rooting for them at some level. But Bitcoin itself has never been tested. And they'll always say, oh, yeah, it has. We dropped 80%. I'm not talking about Bitcoin's price dropping 80%. I am talking about the liquidity of the global economic system. Bitcoin will respond to that. And how it responds to that is not yet tested.
Well, I mean, you've had exchanges blow up. Like, that hasn't happened in a lot of regular stock market exchanges. But you've had what, Mt. Gox and
tiny little bliplets. These are tiny little. They did not go through an AIG crisis. They did not go through, the implodometer phase. They did not go through, massive collapse in real estate. They did not go through something that experienced all those all at one time. Bitcoin has had its own little internal crises, not relevant to the case I'm making. The case I'm making is, how does Bitcoin survive? How does it do? How does it thrive? It might do great. We do know how gold acts during those. And what's really interesting, it sells off, but not that badly, usually.
And it rebounds. I mean, so look at 2008, look at 2020, there was rally. So it did sell off briefly, like you said, and then it rallied later. It's like what the hedge fund manager, right, that has too many leverage trades on, and they have to sell whatever assets they can for cash. And gold is one of the main things that they sell to pay off the margin debt on their other trades that are going bad.
Right. So we'll find out next time we have a real crisis that the Fed loses control of, how Bitcoin responds. We'll find out how Nvidia responds. We'll find out how Apple responds. If, again, Apple revenue's gone up 50%, share price gone up tenfold. That's insanity.
I think there's flight capital here. It reminds me a lot of the 12 to 18 months prior to the October 1929 crash, because I would argue the global economy is already in a recession or depression, like in Europe, the European Union, England, Japan, China, emerging markets.
How's Germany's economy doing?
None of the European Union countries. My point, though, is that like the institutional investors, a lot of their capital is coming to the U.S. Technology stocks because on a relative basis, they view it as safer. So that's like flight capital, similar to the 12 months prior to the October 1929 crash. There's flight capital coming here.
Here's the problem. If you look at the DAX, I'm looking for right now to get a hard number on it. Someone just reminded me of this today, actually. You look at the DAX. So you're hearing how bad Germany's economy. What they do, they shut down all their energy plants. I mean, they couldn't have fucked up worse. They're supposedly in a horrible, horrible economic situation. Since 2000, since 2000, over the last 20 years, let's just do the last 20 years, the DAX is up fivefold. That doesn't sound like an economy that's in trouble. Well, it is in trouble, but the equity market is not. Now, one is real and one is not. The economy is real. The equity market is not. Something is driving the DAX up against all idea of buying shares of companies to produce revenue streams and things like that. There's something wrong with the DAX. It's not pricing in the fact that Germany sucks balls right now.
Yeah, I think your dog agrees.
It's going hyperbolic while the economy is said to be in a horrible state. And so the efficient market hypothesis is not holding up well, but it will. So it's not efficient. But regression to the mean, it'll show up. It's a force of nature. And so I'm emphasizing this because at some point, the people who thought they could just get rich like this are going to be curled up in fetal position, whimpering like little bitches, going, I wish someone had told me to get out. and people are gonna say this is sour grapes, or stop clock is right twice a day. I go, okay, let me ask you this. If when that stop clock was right, the entire house blew up, would you pay attention to what time it was? Yes. So the point being is that sometimes when the doomsters are right, it's a disaster.
Well, this is the thing about the Cantillon effect that most people don't understand is it causes these types of distortions like what you described between a
Absolutely.
huge divergence between the real economy where we would look at like the state of the German economy and say there's no way the German stock market index should be this high and the asset prices. So this is what you get in a debt-based fiat currency, central banks intervening trying to cut interest rates, juice liquidity, and then juice asset prices, especially stocks and home prices.
Right.
And
And
then the gold price finally is starting to respond to this. We have the gold price almost at 2,900. It's been holding up very, very well lately.
well, there's also this funny flow of gold out of London, and I don't know if it's heading east or west. Some people think it's heading west, some think it's heading east. I don't know. But
Asian
there
retail
will be,
investors, we've had the last 18 months unprecedented demand because there's been currency weakness in Asian currencies too. So there's been the Chinese real estate investor has gotten killed the last couple years. So they've diversified into U.S. technology stocks, Bitcoin, gold, physical gold and silver. They're not buying gold mining stocks.
right. So that sounds like people are trying to protect themselves from a catastrophe. Well, investors of Nvidia don't seem to be protecting themselves from a catastrophe. So there's the question of, well, who's right? Um, and for 25 years I've owned gold. My cost basis is below 256, even though that was the bottom because I was getting it from a closed-end fund that was 20% below NAV. Um, but 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 it's for those 25 years they've talked about how the Colmex is going to default. And every time they say that, it doesn't. And so I've long since stopped myself from getting excited about some, above ground silver supply getting depleted or above ground gold or available gold at the COMEX or whatever. The claim right now is that London can't deliver for 8 weeks, which is a record. And so that there is a physical gold shortage, and that somehow will eventually show up as maybe wake up some Monday morning and the price of physical gold will spike and the price of GLD will tank because people will realize there's no gold in there. Who knows what, right? There's all sorts of possible disaster scenarios. But for 25 years, I've been hearing about disaster scenarios that never take place. And I do believe we're heading towards them, but it's just a very slow process.
Well, we're already at a healthy gold price for gold miners and gold royalty companies. So, I mean, if they can't make money at $2,857 gold and have good profit margins and free cash flow and pay out higher dividends, I mean, there's something wrong with the management team.
Well, that could be true, though. So, if you look at the gold miners during the boom of the noughts, gold went from 256 to 1900. The miners went up tenfold. Gold drops back to 1200, which 256 to 1200 is not shabby. The miners gave it all back, which tells me that the guys who mine gold don't know how to make money. So
Yeah, they don't know how to run their business. There's the two
right.
main gold miners. I mean, there's been problems there with Barrick Gold and Newmont Mining for many, many years with bad
Well, the guys
acquisition.
I pay attention to wouldn't touch either of those with the 10-foot pole. There's some more obscure ones they like better. But
Well,
I'm not a big fan of the miners because I really think that it's a tough business and there's geopolitical risk in most of the businesses. And politics can play a huge role. They can cut off your ability to mine. I have 3 South African platinum miners, and they were cheap as shit when I bought them with a Fortress balance sheet, and they're now even cheaper. Right?
well, the narrative now for that is that there's going to be no demand for catalytic converters or hybrids or internal combustion cars because of electric vehicles. So when that narrative changes, then the market will start to price in demand again for platinum and palladium. So
Well,
until that,
platinum has been dead money, flat as a pancake dead money for 10 years now. So I'm watching it carefully because I think when it decides to lift off, I think you'll be given only a little amount of time to do it.
I
And
mean,
then,
it makes a lot of sense because the price is flat and the mining costs are going up. All that we need is just a catalyst on the demand side because it definitely looks like there's supply problems because the producers are not making any money at the current price.
well, the other thing is, I don't think electric cars are going to be where the market eventually settles in. I think it's going to be the hybrids, and they use quite a bit of platinum.
Oh, yep, I agree. We're in agreement there. I mean, like to add to your points there about Newmont Mining, why it's not good. I mean, they hired a lot of DEI hires, vice presidents making over $100,000 a year. There was a lot of waste that they had to cut in the last 12 to 18 months.
Well, platinum's up about 6% in the month of January, so it's done
Platinum
okay.
is.
Yeah, but that, who cares about 6%? That's just a flutter. But at some point, I'm watching it carefully. I know some smart guys who are doing the same thing. I know some smart guys who are now watching it who had paid no attention to it. But I think the idea of the internal combustion engine being obsolete is totally ignoring two things. One is that I think the global warming story is a total hoax, and therefore the need for EVs is a total hoax. And I don't think the EVs work well yet.
Yeah, we don't have the infrastructure. I mean, like, there's not a ton of charging stations that are efficient. There's a ton of infrastructure problems for electric vehicles.
Yeah, I just don't think I don't think if you had one car, I don't think you want to have an EV. If you're a rich guy, if you've got three cars, one of them can be an EV, you're fine. But I would not want to depend on an EV to get myself from, one side of LA to the other to get to work.
And especially if you're caught in traffic. Yeah.
Right. And so I don't think the EVs are they're an expensive toy for the wealthy, in my opinion, and the stupid. Um,
Well, I think fossil fuels are cheap and hated right now. So you have what natural gas, oil, coal. They're not very out of favor right now.
yeah,
Those
here's
major.
the problem. If we start getting a serious correction, like I think is coming, everything drops. So you can have the best idea on the planet and it's still going to drop. In 08, 09, almost nothing except for short funds. And shorting is for fools and pros, which are really close to the same thing. Um, you when there's a big market drop, you want to be way up in the out of the splash zone seats. You don't want to be near the markets, which means I get a good idea now. I'm not buying it. I'm not going because I believe that the cheap stocks, when the market's at a PE of 6 in 1981, if you found a stock now, would you like a PE of 6? Yes, you would. Well, in 1981, PE of 6, half the stocks had a lower PE. So you can buy a stock now that's a PE of 12, you think you're getting a bargain, it could go to a PE of 5.
I mean, most of business television is talking about how Nvidia is drastically mispriced and undervalued, that they're going to capture the majority of the big technology companies spending on capital expenditure the next couple of years.
Yeah, things will change quickly when the markets go emergent.
Well, also specifically with that industry, I mean, there's no guarantee that Nvidia is going to maintain their leadership and all the sales and kind of a monopoly then on GPU chip sales for these data centers. So there's no guarantee for that.
Right. Well, also, I kept hearing about a better chip coming out of Huawei, but I might have misread it. It might have been a better algorithm coming out of China. I don't know.
Oh, you're talking about DeepSeek AI?
Yeah, and others, supposedly even better.
I mean, there was a audit done by a Taiwan technology company, and they were saying that the DeepSeek AI actually spent over $1.6 billion training their learning language model for DeepSeek AI, the open source, and they had tens of thousands of Nvidia Blackwell chips.
Right. So the claim is they lied about how cheap the training was.
And that they didn't use Nvidia's top line chips because they secretly bought them through shell companies in Singapore.
Right. That would not shock me. Not shock me at all.
Well,
But
I think those are important points there because everyone's just obsessed right now with Mag 7 and Nvidia, and it's like buy the dip, buy the dip. These things are going higher. Like basically, if you say those narratives, they'll put you on business television. I have friends who are going on like CNBC and Fox Business and Bloomberg right now, and they're talking about how Nvidia is like a really good buy right now because it's dipped and it's going to go a lot higher. So that's kind of unfortunately a lot of people will repeat this, and then that'll get you on business TV.
Right. And then on some fateful day at 2:03 p.m. in the afternoon, at the precise moment where the maximum optimism is reflected by the market's price reaches a peak, at the exact moment, the paradoxically exact moment where the reason for that optimism, the justification, is zero.
Well, personally, for me, with this trend, I would rather invest in what energy, the electricity usage, the infrastructure required. So I would rather have exposure to what some of the uranium plays, maybe copper at the right valuation, natural gas. I think natural gas is
To the
going to be.
extent that I have exposure to the risk assets, I agree with all those.
Yeah,
I
I
do.
think with Trump and a Republican controlled Congress, I think there's opportunities for natural gas pipeline companies, the companies that can take the cheaper natural gas and turn it into natural gas liquids and other
Well,
important
so
chemicals.
Doomberg will make the claim that all these fossil fuel companies always find a way to drill their way into bankruptcy.
I mean, those are the producers though. Those are the exploration and production companies. I mean, I'm talking like I basically the liquefied natural gas export companies, they don't build those facilities unless they have contracts to sell them at a profit. That's why Cheniere Energy is doing so well.
Okay. Well,
Yeah,
uh,
those things are many billions of dollars to build those facilities out. I mean, it's the energy
I
return
like
on.
the ideas. By the way, there's a chart that people misinterpret all the time. It's a chart showing capital unintensive businesses and how their equities have done. And of course, they've soared. It's all the mag shit and things like that. And then capital intensive, and they haven't done squat. And what it shows you is the companies that actually create wealth have gone nowhere. And as the companies that are just shuffling pixels and eyeballs and cash around have done fine. But that's not wealth creation. So I agree with all these mining stocks and stuff. I just think that I do think we're gonna have to fight the Balrog en route to success.
A lot of those people, Dave, are the same people that think electricity comes right out of the socket. They don't know or care about all the hard work and investment and capital expenditure and risk required to produce electricity. So all the fossil fuels, all the infrastructure required, the electrical utility companies, the electrical transmission lines, all those things that are required just so that way you have electricity in the socket.
Right, right,
And this is, I think, the issue that the artificial intelligence companies, the data centers, they're going to be running into these obstacles over the next 5 or 10 years. That as people switch from regular internet search to what using artificial intelligence software, I mean, like it's a 10x increase in electricity.
right. Well, I think the idea is right. And if you're a money manager and you have to have exposure to equities, these are exactly the ones I'd go with. And of course, you'll probably go bust because Nvidia will hang in there longer than it should. It already has. And people pull their money and say we're out. And therefore you'll be the last man standing, and then that'll be the top.
Uh,
Um,
last last question here. I want to ask you about, as a libertarian, some of the policies that are happening in Argentina. Are you excited to see the changes that Malay is doing, that he's actually cutting taxes and getting the inflation rate down and making it easier for foreigners to invest there? And do you think that Argentina is going to benefit from this in the long term?
my understanding of Argentina is really headline level understanding, which means there's no depth to my knowledge. So I would just be reciting what I'm reading on, Reuters or whatever. And so I don't think my opinion on that's terribly useful. Um, and to the extent that it's a kind of a nationalism that he's doing, it seems likely to me that the authoritarians might find a way to put a cap in his ass because they don't like that. So the WEF crowd, he's not really catering to. So who are the big guys who are getting hammered? Who are the biggest nationalists? Well, it's Putin, Orban, Trump, right? Who's drawing all the fire? Putin, Orban, Trump. Um, Malay, probably Maloney. There's a bunch of people who are bucking the system, and they draw a big fire. So Malay's got to survive for his policies to work. There's a lot of powerful people who do not want them to work.
It's just an overall sad situation in Argentina because of how bad things were for so many decades. But, I'm cautiously optimistic that things are improving. I mean, there is at least some improvement in the first year or two there. Hopefully, this trend continues and the people of Argentina get a better economy with lower taxes and currency stability.
It would be great if Malay succeeded. There's no question. And it's a kind of a case study too, right? It came at the right time. So now you got Trump doing what he's doing, and you got, Canada looking to kick out that happy clogger Trudeau or Justin Castro or whatever his name is. and they're throwing out the bums, as they like to say. And as a consequence, there's a sign that people are now ready to get rid of the evildoers. And I think one of the problems is the pushback in the United States against Trump is so strong. It's not just they don't want the party to stop, it's that they don't want to get hung from the neck until dead. Because there's a lot of people who are going to be revealed to have committed massive crimes. I think they'd like the party just quietly stop. They'd be happy to take the money they have. It's like, for some reason, I don't even understand why he did this, but the other day, Zelensky came out and said, that 176 billion you said you sent to us, well, we only got 75.
Boeing got a lot of it. Yeah, Boeing was almost bankrupt. I mean, I was speaking to hedge fund traders 2019. I hadn't looked at their financial statements because the management team at Boeing, they had run the business into the ground. They had done share buybacks with debt. Boeing's debt to equity ratio was almost insolvent in 2019 with the share buybacks with the debt. And then they their plane sales, they were delayed on that huge Dreamliner, and then all the problems, the management team knew they were making bad planes that they were going to break down. They didn't care.
Right.
And then miraculously war comes. And then miraculously, Dave, Boeing's in trouble, and in a new war, more government spending so Boeing can sell all those planes and all the other military equipment that's in the old inventory at a profit.
Right. But also, we're going to find that the money made its way back into the pockets of individuals. And those are the guys who should be afraid.
Oh, of course. That's how the DC metro area works. I mean, the lobbyists, the government agency heads. I mean, there's so many people with their hands out. The average congressional salary is what, $180,000 a year? No one gets rich off of that. The cost of living here in the DC metro area is very, very high.
Right.
And yet you have these people
buying mansions.
Huh?
They're buying mansions.
I mean, there's a lot of people in Congress. Their net worths are over $10 million. AOC's claiming her net worth right now is only $45,000. I honestly don't believe that.
Yeah. Meanwhile, in the same breath, she's saying Elon's an idiot. There's a funny one.
Well, I mean, she got tickets to the Met Gala for free and in couture dresses and stuff. I don't think. I mean, since I don't really care anymore. I mean, both political parties, I'll just say it, there's a lot of people in Congress here committing charity fraud. So they have their foundations, they have their fake charities, they only have to donate, I think.
I actually do think that they had reached a point where they thought they were untouchable. And
especially if you had friends in the Department of Justice or in the tax departments, yes.
Right.
That was how the status quo for decades.
What they didn't see was Trump winning again and coming back stronger than anyone could have imagined. And the richest man in the world, who's deep state in many ways, but somehow is so far on the spectrum that he doesn't seem to care. And who's got a brain the size of a cantaloupe, and who seems to be determined to help Trump rout out the like a truffle pig, rout out the criminality and the wasted money and stuff. And so you got all these guys squealing about NIAID and how important it is and stuff like that. No, these are people who are afraid that they're going to get caught with their hands in the cookie jar. And again, they should do prison time. We're not just talking about, I'm not going to keep getting rich. They should do prison time.
Oh yeah. Instead of a poor person getting caught for 10 or 15 years for a bag of marijuana in the past, because like
That's right. Do
they
you think that Trump is going to dedicate serious effort to sending people to prison, or is he going to look forward and let those people go and just rebuild? I think, I've been kind of agnostic on this point, but most of the podcast hosts that I asked that question to, they said, oh, he has to go find the criminals. They can't let him get away with what they did.
I mean, it depends how many of his own people he can install in the government agencies because his first term, all that stuff was blocked. I mean, it
So
was
what's the status of his three most recent important appointments? Kennedy, Gabbard, and Patel. What's the status on those?
well,
Are
it's not
they-
just the people at the top, the main political appointees. He has to put in the upper management and the middle management too. So they have to, because it's the lieutenants that are carrying out the orders, the captains and the lieutenants at the people at the top. So the first term of Trump, I mean, like a lot of the political appointees, the agency heads and stuff, he didn't get any of that stuff in. They were blocked. I mean, the amount of leaks, the amount of his political appointees were blocked.
But he had 8 years to ponder who he could actually trust and who was actually competent, and so that's why his new appointments are very impressive.
Yeah, I agree. I mean, he had to put in a lot of deep state people and military industrial complex people. I mean, he gave John Bolton an important position, and that guy's like he wanted to, I think, attack Iran. So
Well, I think Bolt was an attempt to compromise with the neocons, and I think he very much regrets it. I think it's like negotiating with terrorists, right? As they say in Israel, don't do it.
well,
Um,
but that's not the way the DC metro area works is like these guys that have like top secret security clearances and were in prior administrations for different Republicans or Democrats in the White House, they get recycled. So these guys like hang out here all over the DC metro area. They go on TV, they work at a
well,
think
now they've
tank.
lost all the security clearance and access to federal buildings, so they should pretty much be allowed in Dairy Queen and Dunkin' Donuts.
Correct. That is the way to get rid of them. So that's the only way to get rid of them is
Well,
to
that's
take
what he
away their
did.
six figure a year jobs from their security clearances. Yes, that is the only way.
Yeah, well, that's what he did. So,
So he's figuring things out, but like unfortunately, the way the system works here is all these the same advisors get recycled. So they just wait it out for 4 to 8 years. They go and work at a lobbying firm or a think tank or a consulting company. They set up their own consulting company, and they go on regular TV like whichever
yeah,
cable
but
news
here's the
their political
problem.
party.
If you spend 4 years out of the loop, how valuable are you at that point?
None of the Dave, none of these guys are valuable. The ones that are
Well, they're
recycled,
valuable
none of
to the
them are
extent
valuable.
that,
If you go, this is hilarious. If you go and listen to their interviews from 4, 8, 10, 12 years, they just repeat almost the same thing on TV all the time.
right, they are insiders who are now outsiders, right? That's the problem.
Well, Trump
They've
is
now lost the one thing that was being purchased from them, and that is that their access, and they don't have access anymore.
he is they are making progress on draining the swamp. I mean, this stuff with the USAID is fantastic in only a couple weeks. So let's see how things go with the Medicare fraud, the Medicaid fraud, the Social Security fraud. I mean, if he's able to get a chunk of that removed, Elon Musk and Trump, that would be unbelievably impressive because that's way over $100 billion per year in waste, fraud, corruption, and abuse, right?
Yeah, yeah, I do think it's going to be a heroic effort to find enough money to actually dent our grotesque excess budget. He's going to have to slaughter some sacred cows. So,
Well, cautiously optimistic, fingers crossed. The Department of Government Efficiency has already accomplished more in the first couple weeks than I thought they would accomplish in 4 years, and I was cautiously optimistic.
absolutely, absolutely, I'm enjoying watching it, and I will be disappointed if it turns out to just be more kayfabe and that I got duped.
I mean, they have a lot more planned. I mean, I was speaking with a few of the Department of Government Efficiency people on X a couple days ago. It sounds like they have way more stuff planned. We'll see if they can get to the Pentagon. The real juicy stuff besides the healthcare insurance, all the healthcare fraud in the healthcare system is what the Pentagon accounting. That is a mess. If they can get to that and start cleaning that up, and then like going after all the bailout stuff, the garbage stuff that the Federal Reserve Bank and the Treasury have hidden off balance sheet from the 2008 bailouts onwards, that would be impressive.
Right. No, I'm optimistic. I'm I'll just, he's had a great start. The slope is almost vertical.
For us, we consider that a great start. I mean, like, there are people literally like full meltdown here. I have not seen things this the people this angry in the Washington D.C. metro area in many, many, many years, maybe ever. And I've lived here almost 25 years. They're that livid.
Well, they have nothing to blame but themselves for letting the system go to hell.
Well, if you were getting paid $200,000 a year for your primary job and you didn't have to go to work that much and you had Cadillac healthcare insurance benefits and retirement plan, and then you had your other side businesses making another six figures, and your main job you hardly had to work at all or didn't go to work at all, maybe a one Zoom phone call a day, and you didn't get fired, you'd be angry you lost all that easy income too.
Right. You deserve the pain and suffering in your future.
Well, some of them are taking the buyouts. That's some of them are seeing like they see the writing on the wall and they're taking the cash lump sum right now and they're getting out because they see that they could get fired. So some of them are taking the buyouts. Well, I
Mm.
want to thank you so much for your time today, Dave. I'll put links to your year in review in the information and description section. If my listeners want to follow your work, how do they do so?
Well, Bob Moriarty for several years now has actually uploaded my year in review as a hardbound book on Amazon. And I must confess that there's not a huge advantage to buying the hardbound version. I was told today that my click count at peak prosperity on this monstrosity of a document is a 500,000. So it gets around the block, I'm told. Um, but it's at Amazon, and if you want to get a hardbound copy, think of it as a Patreon donation. I mean, I get about half of it. Moriarty actually paid for the entire cost of formatting it and uploading it and turning it into a book. He personally put the bill. He's done it for several years. Um, and then I'm at Twitter at David B. Collum. And at some point, I'm going to be doing a GoFundMe for a kid who is very close to me. He's not a kid, he's 49 years old, but he's a famous harpsichordist who just had a stroke. And since you don't know him and there's people suffering all over the world, you have no reason to donate to him. But I'm going to ask people who, since I've never asked for a penny for thousands of pages I've written and truly countless hours of podcasts, no Patreon, no nothing, no trying to make a living or anything off this stuff. I'm going to ask people to consider donating just a couple of bucks as a kind of a Patreon donation to me, but to this kid. And so I might ask you to push that out to your followers. It'd be great if we could get a bit of a bolus. One night, I had a colleague whose wife had a real problem, and I went out on Twitter at about 11:30, 12 o'clock at night and gave a push for her GoFundMe. And he came in my office the next day and he said, I really want to thank you. I go on. And he told me, and I said, I just tweeted it. And he said, well, I went to bed and woke up with about $20,000 more in that account than I went to bed. And I go, okay, that probably was my tweet. So I'm going to ask people to do it again, not because they know they can feel bad for them, but as a kind of a donation to me, which I'm passing along to him.
Oh, if you
And
have that type of marketing pull, you should tweet out that I need a new business partner here, a larger financial company to help restart subscriber growth on my YouTube channel.
yeah, right, right. So in any event, if any of you listening happen to see this plea for help for this kid, consider it. If you want to endorse my efforts, do it for me. That's what I'm going to ask for.